Hey everybody, good evening. It is Tuesday, January 24th, 2023, 7:20 p.m. New York City time. And I hope everybody had a great day and a good trading week so far, early in the week here. Today, guys, just want to show you another little potential day trading strategy. This is something probably execute on a shorter time frame. These would definitely be, I wouldn't call them scalping trades, but day trades most definitely, where you'd be probably out of these trades, honestly, within a couple of hours of taking them. And so let's talk about what is here and what pairs that I use it on, and I've been back testing on. All right, and before we get started, guys, if you like the content, before you do anything else, smash that like button and subscribe to the channel. You should see something down in the lower corner of the screen here where you can subscribe, and then ring the bell notification so you know when a new video is posted. All right, so this is basically a session trade. So you can see, first of all, I'm on a really short time frame. This is a 5-minute chart. It happens to be the dollar yen. And like I said, this is a 5-minute chart. And so this indicator, which you do not need, is a free indicator. If you go online, you just Google, if you're using MetaTrader 4 or 5, you just go online and Google, MT4 or MT5 session indicator. And there's a bunch of them. They're free. Don't pay for it. And you can download it and you can set it up. And this is basically what they all look like. And it just basically draws a box around the sessions. Now, it normally shows all the sessions, Tokyo, London, and New York, and it'll even show Sydney if you want. I turned off all the other ones. I'm only using New York. So I turned off all the other ones in the settings, and because that's all I care about, because I only trade the New York session. So that's all I'm looking at. And so, like I said, what it does, it draws a box around here. So this box represents the day we just closed. A couple of hours ago. So this is the beginning on the left-hand hash, and then the box expands to the highs and lows, obviously, and then this is the end of the day on the right-hand side. Okay? So pretty simple. And it's just for visual. And again, guys, you don't necessarily need this. You could easily just throw a line on your chart to mark off the beginning of the session. Because if you're going to trade this, it's going to be early in the session anyways, and you're going to be out probably before London closes, so you really only need to basically mark off the opening time. So, and what this does, guys, is it takes advantage of basically the large players that are in the market, much like in the futures, like in the NASDAQ, S&P futures that I trade. Oftentimes, and again, it's not every day, but oftentimes when the market opens, so let's say when the New York session opens at 8 o'clock Eastern, you're going to get some initial price manipulation and movement. And then, the banks and the large institutions and large players basically conduct their business, and then, they get out. So, of course, a lot of them need to be able to fill larger orders. And so they will run price in one direction and then go the other way, which is very obvious on short time frames, not so obvious on a longer time frame. But on a time frame like this, 5-minute, 10-minute, 15-minute, it's pretty obvious. And then they do their business and they get out. And so if you see this here today, this is clearly, banks doing this and large institutions with it. Market opens, chops around for a little bit, and then we get this big run up in, 5, 10, 15 minutes. Remember, these are only 5-minute candles. They run it up here, and then they slam it right down and take it all the way back down near the lows of the entire session of the whole day. And this started at basically 1700 hours, which is, so that's 2 hours. So this is 10 a.m. So this candle was the 10 a.m. candle, this first bearish candle. And then you can see it ran down 17 candles. So that's, basically just a little over an hour. And from a time perspective, this is 18:30. So this is only an hour and a half later. So this is basically 11:30 a.m. just before the London close. And you can see in that time frame, in that time span, we went down 120 pips on this dollar yen. Okay. And then, that's it. And then you can see the rest of the day, London closes, the market retraces, and then just kind of goes to sleep the rest of the day. All right. And that's pretty typical. So now the pairs that I've tried it on, again, I only trade New York. So I can't speak if you're watching from, Asia or Europe. You're going to have to test it. Again, you're probably better off with currencies or pairs that are trading that are heavily traded during your time of day, if you're going to trade a session other than New York. But for me, that's what I do. And really the main pairs that I've seen this work decent on is the dollar Swiss, Euro dollar, dollar yen, and Aussie dollar. Okay, I didn't try it on Kiwi dollar, but if I do Aussie dollar, I'm not going to do Kiwi dollar too. It doesn't work all that great on pound dollar, so I'm not using pound dollar for this. And I tried dollar Canadian, not a big fan of that either. The Canadian dollar tends to lead to pretty choppy price action. To do this in, you need things that move a little smoother. So I would limit it just to those 4 pairs. And if you wanted to do just one, you could just pick one and just do that. And you may not get a setup every day, but most days you will. And I'll show you just, back just a few here, and you'll see the consistency. Now, this is going to be, basically on days when there's no big scheduled news releases. If there's any, fundamental, news release, if it's a CPI day or, non-farm payroll or PMI or any kind of big news release day, I'm not so sure I would do this because the volatility, especially on this short time frame, probably wouldn't make a lot of sense. But on a kind of a quote-unquote normal day when there's nothing really big in the news in terms of scheduled risk event, then this actually can be a nice kind of day scalping trade. And so basically, you can see with this dollar yen is, again, today, it ran up from the open, and again, we hit about that. Usually it's somewhere between 9:30 and 10 a.m. is when if you're gonna have an entry, is where you're gonna have it. Now, the bigger the range from the open to this turning point, the bigger this range, the more likely this trade will work out. If you see, a really small inside day where price opens here and it just, even up to 10 o'clock, it's just kind of moving inside this range, there's a good chance it's not going to really do much for the day. It's just maybe just a quiet day, especially if it's like the day before a big news release, something to that effect, where it's, it's going to just kind of, hold its breath till the next day or something. And so you want to see a big range like this, okay? So that's the first thing. If you want a little extra confirmation, you can also use a longer time frame for overall trend direction, because obviously you want to at least try to trade in the direction of that trend. So I like to use the 4-hour time frame. And again, you don't really need to go much longer than that, because honestly, these are such short time frames, and you're in and out of this so fast. I wouldn't necessarily worry about daily or weekly. I think a 4-hour is fine. You might even be able to get away with 1 hour, but certainly somewhere between 1 and 4 hours I'd look at. So if I go to a 4-hour chart of this pair, obviously you can see we're in a downtrend. This is a 200 exponential moving average on here. It's just for visual. Obviously, you don't really need it. You can tell it's in a downtrend, lower highs, lower lows, etc. So this is, a good confirmation. And so, because here's the 1-hour chart, and it's not as obvious on the 1-hour chart. It's a little bit messier. I could zoom out a little bit and say, okay, yeah, it's still in a downtrend, but it's not as clear. So that's why I like the 4-hour, just to kind of get the overall trend direction. And again, guys, don't force these trades. If it's not there, it's not there, and there could be, you even though this is on a short time frame, could very well, that you could go, a day or two without an entry, just depending, where the price action is, within the trend. Is it still in a retracement zone, or is it ready to resume the trend, etc. So if we go back to the 5, and I'm going to turn off the scroll here, you can see, so that was today, and then if we go to yesterday, again, here's the open, and we run up here, And right there, this is 16:30, so this is 9:30. So like I said, between about 9:30 and 10 a.m. is when, if you're going to get these entries, you'll get it. Now, this was a pretty quiet day. You can see the range running up to it was not all that great. It did move down in the direction, but this is a day where, you may or may not have taken a trade here, because this, was a pretty small move. It's only about 30 pips before price retraced and then just kind of went sideways the rest of the day. So that's what I was saying about, you want as big of a range as you can leading into it. So here is the day. So this was, I guess, would have been Friday. And again, even though this is the New York Open, you can see the run up into it was pretty good. And again, from a time standpoint, this is 1600. So this happened a little bit quicker. If we go out to 1630, which would be on the half hour, you certainly could have waited till there. So if you want to wait a little bit, then you can, if you want some confirmation, use whatever confirmation entry you want. Let's say you got in right here, 1630, right here. If you took it down to the lows, it's still, 80 pips. And if you just took it down to the London close, it's still about 60 pips. So again, you're looking at, anywhere from 30 to maybe 100 pips you're going to pick up on these trades. Again, that don't get greedy with them. I would not hold them past end of day. In fact, I probably wouldn't hold them much into the afternoon session unless it really looks like it's continuing. And again, if you want a little bit more confirmation, use the longer term time frame to trade in the direction of the trend. It's just going to put the odds a little bit more in your favor, though you don't have to. I mean, you could certainly do a counter trend trade because, again, it's a short time frame, only for a couple of hours. But, you're just boosting up your chances of the trade working out. Here's another just completely flat day. You can see there's nothing going on here. All right, there's like no range. If we look at 1630, between 9:30 and 10, that takes us to right in here, and you can see it's a very small range, and the price did absolutely nothing this day. So this is a day where either you wouldn't have taken a trade, or if you did, you either would have had a very small profit, a very small loss, or a break even. It's just one of a flat day, that's all. And remember, this day we're still in a downtrend here, right? So your entry 1630 to 1700 is down at the low end of the range, which means you'll be taking a long position, which is counter trend. Okay, so this may not have met the requirements anyway, since you'd be trading against the larger trend on this day, because at the time when you'd be looking for the trade, you'd only be going long here, not short. Okay, so this is maybe a day where it wouldn't have worked out. And then we have this day here. Okay, and again, this is a counter trend trade. Now you can take it. But you can see, the turn again happened right around 9:30, and we rallied up 130 pips in, let's just call it 45-minute candles. So what is that, 3 hours or so? Just a little over 3 hours that this took, and you'd be out. So you'd be out of here by, 12:30, just after the London close. Okay, so you can see, basically what I'm talking about here, guys. So you can do this. So that's the dollar yen. This is the Aussie dollar. Pretty much the exact same thing. Now the Aussie dollar is trending up right now. So this one you'd be looking for longs. And again, right there at 1700, this is where it turned. Okay, and proceeded to go up about 60 pips again into the London close, and then it just, again, this is the afternoon session where things just kind of move sideways for the most part, not always, but for the most part. Day before, turn off the scroll. Same thing here. Here's 1630. All right, so this is 9:30. Here's 1700. So if you waited until 10, here's that. We had this little pullback into some demand here. And then we rallied up. We picked up about 70 pips, again, closing out right around the London close, and so on and so forth. Okay, and again, remembering on this pair, okay, we've been in an uptrend. So in those examples I just showed you, we'd be looking for long trades here, because as you can see, we're clearly in an uptrend, moving average angled up. And again, you don't really need the moving average, but if it's a nice visual, I like to use a 200 EMA Just simple like that, just for visual purposes. Okay? But again, as long as we're making higher highs, higher lows, consider ourselves to be in an uptrend, and there you go. Okay, so you're basically just, again, guys, you're taking advantage of the what the big banks and institutions get in, and they're kind of their initial work for the day, where they get in, do their business, manipulate the market, kind of run some stops, grab some liquidity, and then do whatever they're going to do. And they're usually, done pretty quick after that. Once London closes, a lot of the volume kind of dries up, and that's why very often in the afternoon, unless it's like FOMC or something like that, where things will just kind of tend to start moving a little bit more choppy and sideways once the London session closes, which is noontime Eastern. So again, guys, there's nothing magic about this, and again, it's not like it's going to work every time you do it. You will take some losses. This is a short time frame, so it is very easy to get whipsawed in and out of trades. You could do it on a little bit longer time frame, but again, considering how short time you're going to be in these trades, I wouldn't recommend going much higher than the 5 minute, maybe 10, but I wouldn't go much more than that, because again, you're not going to be staying in these trades for very long. So if you take it on a too long of a time frame, by the time you get your entry signal, the move is going to be half over. And again, considering these are not long-lived trades, you want to get in and out, maximize what you can, then get out. Okay, so I would target the London close, or maybe just before that, for a target zone for how long I was going to keep the trade. If it gets to the London close and it looks like it's still moving pretty impulsively, then move up your stop, or throw a trailing stop on, and see if you can get a little bit more motion into the afternoon. But if you wanted to, you could do that. But if not, like I said, just target just before the London close or at the London close, and then get out. Just whatever you got on the table, just take it and run, and then you're done. And there's nothing else to do the rest of the day. So, all right. So again, it has to work from a time perspective. You got to be on the charts around that time, so you can see if there's any potential setups. And again, I would use the filter of the larger trend just to put the odds more in your favor. Just understand, if you go against the trend, you certainly could do that, but it's just a little bit more risky, and you might not get the price action that you need to make one of these trades worthwhile, unless of course you're getting it again on a day where the price is reversing off of a key level or something like that, or there's some big fundamental catalyst that comes in to change it. But like I said, these are best done on days where there's no nothing big, at least scheduled risk event on the calendar. It's just normal quote unquote trading day. But again, you might want to also just look at your levels on the higher time frames and make sure you're not running into a big zone somewhere on the chart, a supply or demand area, whatever you want to call it, where price could have a hard time getting through if you're trading into that area. So all right, so that's really it, guys. Not going to make it any more complicated than that. Kind of interesting. Like I said, just limit the pairs that you're trading it on. Make sure you back test it on any pair. Go back as many sessions as you can, and just see. And you're going to know pretty much after even looking at 8 or 10 sessions whether that particular pair has any consistency to to whether it's going to work or not. And again, I only trade New York, so it makes sense that those are the pairs I'm looking at. That have the U.S. dollar in them. Although, like I said, the pound dollar did not really work that well, so I'm not trading this on cable. So, all right. So, hey guys, any questions, comments? Put them down in the comment section. Again, smash the like button and subscribe to the channel. And I look forward to talking to you guys again really soon. All right. Have a good night, guys. Catch up soon.